The following is a presentation of TFNN. It is now time for The Trader's Edge.
11 seconds. You've got 10 seconds. The countdown going on right now. Morrow up to Schultz. 5 seconds left in the game. Do you believe in miracles? Yes! Unbelievable.
Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Trader's Edge. Good Monday morning to you, folks. Hopefully you had just simply a fantastic, outstanding weekend. I know I did. And, folks, I absolutely treasure your presence here today. My outcome is to help you to become a better money master. Absolutely, I want to be able to inspire you today, but mostly I want to always give you those tools, those bricks, that brick and mortar so that you can lead an inspired life. Nothing like walking down a path, folks, where you are leading an inspired life. My personal outcome, and I hope it's yours as well each day, is just simply to improve our skill set. So let's go take a look at one of those tools, one of those skills that'll help us to lay that groundwork for leading an inspired life. It's called self-preparation. Now, when you think about the Olympics, think about these folks out there. It is Olympic Monday. Think about these folks that have been preparing, some for 4 years, some for 8, some for 12. I mean, just simply been preparing a lifetime, and it comes down to one single race, one single vault, one single this, one single that. And oftentimes, when you take a look at the difference between winning and losing, between first place and second place, oftentimes, a millisecond, a nose. You know, it is that way in life, and I want you to be first at everything it is that you do out there, and you need to make sure that you've got self-preparation. So self-preparation, folks, it's a discipline with really two primary benefits when you think about it. The first is that it moves you towards your goal. That means you know what it is that you want to do, and what you're trying to do is just simply move forward. That's your first benefit that comes from self-preparation. I know that you use self-preparation when you're placing your trades, when you're looking at the market. The second benefit, folks, is that it refuels your mission. And that's what you absolutely need, especially when you are stepping up, and you are stepping up for the race of your life, or whatever race it is that you are involved with at this moment. Just like over at the Olympics, works the same way, day in, day out, with each of us out here. So you have those two benefits, the benefit of just simply moving you forward towards your goal, and that second is that it helps you to refuel. Now, self-preparation, when you really think about it, and as you work on your trading and your investing, really involves the three-step process, right? So it doesn't matter whether it's an athletic sport or whether it's just simply being able to learn how to trade or invest. Step number one is what? You always have to consider the opportunity. If you're looking at TigerTV out here, we're taking a look at the Euro-US dollar currency chart on a daily basis. You see two butterfly patterns that are out there. Two butterfly patterns that completed in generally the same area out there. Two very powerful patterns. Now, we learn as much from failure as we do for success, so you have to consider that next opportunity. Part of considering that next opportunity is understanding if this pattern were to succeed, where would it move to? If this pattern fails, where would it move to? That way you can do the proper reward to risk. We're going to see that the Euro-US dollar did exactly what it's supposed to do. It's now doing exactly what it's supposed to do. And so we'll go in, we'll take a look at that. But step one, always consider your opportunity, right? Doesn't matter whether it's a race or whether you're simply taking a look at charting out there. Number two, that second step out there in that process is make sure, folks, make sure you know what it is that you need. Well, when it comes to trading, you need to make sure that you've got a platform where you're able to execute the trade, where ahead of time you've identified where you're going to enter, where you're going to exit, where your stops are going to be. You need to make sure that you've got a platform that will allow you to do that, folks. And that comes to trading. And number three is do all that you can each time to make sure that each opportunity is more likely to happen out there. I know that that's what all of the athletes are doing out there. It doesn't matter whether you're in the Olympics or it's your own Olympics out here, folks. That is the three-step process for preparation. Consider your opportunity. Make sure you have all the tools that you need. And thirdly, folks, make sure that you make each opportunity more and more likely to happen. So, Steve, you say, what's likely to happen with the euro out here? So let's go take a look at what you could look at. How about that? That's pretty poor English out there. Let's go take a look at what you could look at. But let's go take a look at the euro, U.S. dollar, and what we could expect out here. Number one, we're going to start here with the smaller butterfly pattern. Why are we taking a look at the euro, folks? Because really, it is all about the it's all about the correlation, the directional correlation between the U.S. dollar index and our stock markets. That doesn't give you, a value correlation, meaning every downtick in the U.S. dollar is worth X number of points, but it does give you that direction. Right now, you've got the euro pulling back, and the euro is about 53, 54, 55. I can't remember the exact percentage of the U.S. dollar index, but basically, this is the mother lode here. This is the queen ship. Right now, you've got the Dow futures trading down about 29 points, the ES mini down about 4 points. What's the euro doing? The euro is pulling back. Do you think it's important to understand what the euro is doing when it impacts your trading? I venture to say it absolutely is. Now, when you take a look at these patterns out here, it doesn't matter whether it's a butterfly pattern in the euro or anything else it is that you trade out here. What you can expect is you can expect at least a 0.382 retracement, a 0.382 bounce. That's really coming from the highs out here on June 20th when the euro was up at the 1.27421 level, all the way down to the low that it created back on July 24th out at 1.20411. If you just simply use your retracement tool, because I know each of you have a retracement tool when you're taking a look at your trading and your investing out here, you'll see that 0.382 came to it 1.23089. You actually had the euro move up higher, most definitely moved up higher intraday on Friday. But when it came back and it closed, folks, what it did was it closed right on that 0.382 retracement level. Once you do that, once you make that move, just like if you're running a race, when you run that race, what are you going to do when you hit that finish line? Well, there was the first finish line in the race out here, that 0.382 retracement area. Now what do? You start pulling back. Well, where could you pull back to? All you have to do is go from the low to the high, and it will absolutely show you the different levels that you would be at. And when you take a look at from that low to the high, you'll see, in fact, let me just change the colors on this. It'll make it a little bit easier. If you are following along on Tiger TV, if you're not, and you're listening on the radio, we absolutely appreciate you doing that. What you can also do is catch the archive of this show on Channel 9. So as I go ahead and expand this screen up here, what you can see from the low that was put in on July 24th all the way to the high of Friday, just simply go from that low to the high. You can see that the euro has pulled all the way back to where? To that 0.382. You can expect that as a pullback. It's pulling back. It may get all the way down to that 0.618 area, 1.21740. What would that do? That would put some more weakness in the market in the early morning session. Look for that 0.618 area to hold. If the euro can't pull back any further than it is right now, what does that set up? That sets up, we got Steve's rubber band out here, my kinetic energy. And folks, if you do less than a 0.618 retracement, I want you to envision taking a rubber band, wrapping it around your finger, and then only backing it off just about 38% and letting it go. And what you're going to have is you're going to have huge acceleration. And if you take a look at what that acceleration could be on the euro out here, if we go from the low, we'll just simply draw a possible A to B equals CD pattern. If I just come down to the low here right now, what you will see, let's get rid of some of these lines out here, make it a little bit easier for you to see what it is that we're looking at, because we can always put our retracement lines back in here. Okay, and let's get rid of, we'll leave that out here. What this would do, folks, if you just take a look at where you're currently at, which is a little bit, maybe it's about a 50% retracement. So let's call that a normal retracement out here. That would then set up an A to B equals CD, taking into that 1.257 level. Now, if you want to know what else is at 1.275, let's just simply come back and go from the high on the daily chart in the euro from June 20th all the way down to the bottom. And what you're going to see is what? You're going to see takes you all the way back into that 0.786 retracement level. That is where the euro wants to head to. Doesn't mean I want to buy euros. Doesn't mean you want to buy euros. But you just simply need to know where the euro is headed. Now, can absolutely pull back a little bit further from here. Can pull back to the 1.21740 level. And what would that set up? That would set up just simply a normal A to B equals CD. If we take a look at what that is, we'll just go ahead and draw that in here for you. So we're going to go from the low to the high, back and pull back. Assume it pulls back to the 0.618 area. That sets up 1.2547-ish. And if we go back and we take a look at the retracement from the high to that low, what you're going to see in that general area. It's right between the 0.618, 0.786. That's what the euro is saying it wants to do. You know, when you take a look at how the euro came off the bottom, when you take a look at these normal retracement levels, just simply on these butterfly patterns, what you'd want to do is go back to the larger butterfly. That took much longer to form because this started forming, folks, beginning in January of 2012, January 16th, 2012 to be exact. If we go take a look at the actual dead cat bounce, the 0.382 retracement off that high to the low, what that's going to set up right here is in the 125-ish range. I don't know why I can't see that here on my chart. Let's make that a little bit easier. Give you the exact number. Well, we won't call it exact. We'll give you the likely number where it would come in. 1.28. 1.28, just use 1.28 as far as what the target for the euro is. That's going to get you up above the area that we already talked about, but that would be a normal retracement, folks, of a butterfly pattern. If we go take a look at the ES Mini out here, let's go take a look at the ES Mini, see what she is doing ever since Friday. Really not doing much, making some Fibonacci expansion and contraction numbers. You can off of swing points. This is the 30-minute chart. If you take a look at the 30-minute low that came in last night at 10:30 in the evening, when it got down to a price point of 1376.75, you can see it did an expansion. It was just, you know, over a period of a couple hours. That 1376.75 was the low. The high came at midnight out at 1380.50. Not really much movement out there. But if you take that difference, multiply it times 1.272, subtract it from that midnight high, that's going to take you all the way down to the low that came in at 5 a.m. this morning out at 1375.75. Now, all that the ES Mini has done here is done just a normal retracement. So you've got the breathing patterns. You can see those breathing patterns just simply by understanding these Fibonacci retracement and expansion numbers. If we go take a look at just simply the daily chart, just take a look at a little bit longer term perspective on the ES Mini, what you're going to see here is you're going to see this uptrend channel. You're going to see this June 4th area where really this uptrend channel uptrend pricing channel began. You can see the ES Mini coming into it with conviction on Friday, backing off just a bit here, just like a pole vaulter, just like a racer out there that's running the 100-yard dash. That's really what the markets did on Thursday, what they did on Friday, pulling back just a little. What do I expect? I expect to see the markets move up into this full moon coming in on Friday. It's either going to move up or down into it. I suspect that we're going to see the markets move up into it. I suspect we're going to see, what you're seeing here is you're seeing the markets making higher highs and higher lows. So what does the ES Mini want to do? It wants to get up and test the upper trend line area of the ES Mini. That would probably take you right into the May 1st swing point, anywhere between the price point of $1391.25 all the way up to $1411.75. That is on the ES Mini. The markets are on the move, just not this morning. They're just simply resting. King dollar up 24 ticks right now. That's because the euro is pulling back. That's because the Great British Pound and the Japanese yen. You've got gold off $3, trading at $16.15. Silver up 14 cents, trading out at $27.64. Our call number 877-927-6648. Love to hear from you folks. Give us a call. We can take a look at your stock or anything else you'd like to. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
with the launch of TigerTV. TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. 877-927-6648. As we just finish off the daily chart on the ES Mini, let's go take a look at some overhead resistance out here. And you can really start in two different areas. Number one, you can take a look at that descending tops line. That is the black line that you are seeing going across the screen here. Just simply starting with the high on March 27th out at 14.1975. Your next two touch points that are going to work are going to be April 2nd high as well as the high from May 2nd, 2012. Where's that price come in? Really at the lower end of the May 1st swing point out there, that low being the 1391.25, and you can expect the ES Mini to get up in there, try to test that area. You get a close inside. You know, this is the area where the battle here is going to be won, and so we'll see what the ES Mini does as it gets up into that area. If it can close above that upper trend line, folks, says you really do have a powerful move that is underway here. Expect that to last through Friday out there. If we take a look at what is maybe popping and dropping, you got earnings before the bell out here. Let's take a look at largest poppers and largest droppers. Largest droppers, TGC Industries. TGE is the ticker symbol. They closed out at crazy eights. $8.88 on Friday. They're trading down 78 cents right now, out at 8.10. Not a lot of trading in the pre-market, so don't know how reliable that number is. If we take a look at the next leader to the downside, you're looking at Arrow Electronics. ARW is their ticker symbol. Their Q2 sales, $5.1 billion versus $5.53. Their income, where's their profit here? 6-month adjusted net income, $243 million versus, it doesn't tell me versus what. There we go. No, that doesn't tell me it either. Okay, I don't see the net income. Doesn't pop up here on my screen that quickly. I won't bore you with it. They're simply trading down $2.67. That's down 7% this morning. Lincoln Electric Holdings, LECO. They closed at $44.44, trading down $2 and change, down about 5%. You've got Lowe's Corp. Now, Lowe's, this is the hotel Lowe's, Loews Corp. L is the ticker symbol. They closed out at $41.70. They're down 1.5%. Citigroup, CIT, they closed at $34.79. They are trading down 11 pennies. That's down really not much. That's down 0.3%. Their net income total loss, net loss, $517 million versus $15.9 million a year ago. I don't know if that, that's earnings that were reported here today. If we take a look at, so not a big mover out there. To the upside, you've got Trimas, Trimas, you pronounce the name. TRS is the ticker symbol. They're up 15%. They closed out at $19.19. Their last trade just fired off at $22.19. Only one trade out there, so you can't rely on that. You've got MWI Veterinary Surplus, it looks like. Is it Surplus? Supply. They traded, they're up 15%. 92.39 is what they closed at, trading out at 106.77. They had net income of $14 million versus 11.3. They had revenues of 554 versus 410. So they're growing nicely. MWI Veterinary, I'm just going to put that down here. MWIV is the ticker symbol there. Let's see, you've got Cal Maine Foods. Calm is the ticker symbol. Nothing like having a little calm in your life. CALM. They're trading up $1. They closed at $36.48. Their last trade's firing off at $37.50 out here. They had revenues of $275 versus $242. Not bad. An income of $37 million versus $7 million the quarter before that. So that is a nice, healthy growth there. Let's see, you got Magic Jack, CALL. They're trading up 2.7% this morning. They closed out at $20.25. Let's see here, what is Magic Jack doing? They had total operating revenue, let's see, they had net income of $10 million versus $3 million. So they have figured out how to monetize giving away telephone service. They had net income per share of 51 cents versus 8 cents out there. That is on Call, CALL. Those are the Magic Jack people. If we take a look at what else is moving in the pre-market here this morning, Shaw Group, SHAW, being acquired by Chicago Bridge. They closed at $26.69. They're trading at $43.70. They have a nice premium. Apple trading up so far this morning, closed at $5.85. They're trading out at $5.90 and change. Best Buy, BBY, the ticker symbol. They closed at $17.76. They're traded at $18.84 right now. You've got UNG, that is the ETF for the natural gas contract, closed at $20.74, trading out at $21.59. 877-927-6648. We get back, we'll go see how these markets are going to drop and whether they're going to pop, folks. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You got the Dow up 7 points, S&P up 2, Composite up 10, small caps up about 2.5, neck and neck, leading the charge between the composite and the small caps this morning. Microsoft up 2 pennies. You've got Google up $6, Intel up 15 cents, Cisco up 16 cents. You've got where's Apple? Apple up $7 and change, so up 1 3/10%. Shaw Group, again, because of the buyout by Chicago Bridge, trading up 59%. So then is Apple, Google, Amazon, Citigroup, and Deere, John Deere, DE is trading up. You've got the UNG, Netflix, and Foster Wheeler, Siemens also popping, as well as Caterpillar, Visa, and IBM. On the downside, you've got Salix Pharmaceuticals, SLXP, they're trading down 13%. Chicago Bridge are trading down about 12%. That's off $5. You've got Mercado Libre, MELI, down 6%. Progenics Pharmaceuticals, PGNX, they're off 41%. Whew, what happened there? I don't see anything in my news feed here, but Progenics, that's a nasty thing. Trading out at 630, taking a 41% haircut. O'Reilly Automotive off a couple of bucks here right now, down 2%. SAP is off 1.8. VMware down. Campania I don't know that I'd probably messed that up. ABV, they're down a couple percent. Lockheed Martin is off about 1% this morning. Questcor Pharmaceuticals is off as well. Merck trading down about 60 cents. Newell Rubbermaid off about 61 cents here. Hopefully I said in percent. I said 61 cents. And let's go take a look at some of these stocks here that are popping and dropping. I've got Chicago Bridge up on my screen here. Let's go take a look at Chicago Bridge, see what it is doing. It did make a nice butterfly expansion down at the October lows here. Really very close to what I guess you could classify that as a 3 drive to a bottom pattern. So making a major low coming into October 4th. What you've got Chicago Bridge doing today, it's got volume right out of the gate. It's already done 2.2 million shares on the way down as a result of that buyout of Shaw Group out here. What it is trying to do is get into it's already inside the swing point here of June 26th. So it's coming in there with volume. Look for Chicago Bridge to get down in the June 4th area, somewhere between 32.48 to 34.80. That is on Chicago Bridge out there. Let's see if we put this thing on a weekly basis here, what Chicago Bridge is doing. So Chicago Bridge, let me just refresh this chart here because it does have volume at the highs. So that is pretty. Okay, nope, it didn't. Okay, good. Glad that I refreshed that screen. So when you take a look at the Chicago Bridge, it is trading inside that June swing point, week of June 8th swing point out there. Let's go take a look at Salix Pharmaceuticals, SLXP. See what she is doing here this morning. SLXP trading other than trading down 13%. See what Salix is coming into volume-wise. Let's see here. So this is gapping down below it's got several little breakouts inside this thing. So that's not too shabby looking. I don't know what the news is that is on Salix Pharmaceuticals. Let's see here. Other than a downgrade. So they've gotten a downgrade. That's the only thing that I show popping up on my screen here. Volume so far in the first 8 minutes of trading is about 689,000 shares. So what is that thing going into? Let's go put this on a weekly chart. That's going to be easier for us to take a look at. So it's going into this downdraft here. So it's running into this little supply line. So you can see Salix Pharmaceuticals having some problems back in February of 2011. The top of that is 44.36. You're trading 46.75 right now. Expect the $44 area. Looks like to me to be a area here of some type of support if you are in that stock. Let's go take a look at Progenics Pharmaceuticals, PGNX. That's the one that's trading down 42%. I don't see any news on that. PGNX, so they are taking an absolute haircut this morning. PGNX is the ticker symbol, trading out at $6.30. If we take a look at this coming right back to a breakout area, what's below the breakout area, this thing broke out nicely with some good volume going back to December 19th, 2011. So let's put this on a little bit larger time frame and on the weekly chart, see what this is doing on the weekly chart. Let's go ahead and refresh, just make sure I've got a good active data feed. So you can see this breakout. Pretty darn nice breakout here on the week of December 23rd, 2011. Had 4.1 million shares out there. So that broke out. So where did it break out from? It broke out from the low, really, of November 25th. So you're looking at a price point of 501 up to 603. It's traded at 633 right now. Briefly got inside that November 25th swing point out there. May not be, and it's also got some volume support right in here, the week of February 11, 2011. Don't know anything about this. Well, look at this. We come back even a little bit further. So this thing is just simply working off a major supply line. Goes back to March 14th of 2008. Look at that, folks. 20 million shares on the way down, as well as 20 million shares on the way up, April 25th, 2008. What a supply line out there. So this thing is really in a trading range if you take a look at it. Not that far away from the low of that trading range and the high of the trading range being the most recent highs out here in April of 2012. Let's go take a look at Mercado Libre, MELI. That was a IBD stock. That thing fell out of bed, I believe, at one time here, not recently. Yes, it did. Gapping down with some huge volume. It did that and just simply broke through a area where it did break out. Let's see where it's trading based on its original breakout. When I say original, I mean going back to November 2003. Mercado Libre here just simply trading in the sideways range here, probably building strength to move lower and to complete its A to B equals CD. That would take you down into the $45 area. It's trading at $70 right now and change. Let's go take a look at Apple. See what she is doing. She is trading up $10 right now. Apple. Let's see here. I don't have that chart, so let's go ahead and put it up on the screen. AAPL. And see what she is doing. She had made a Gartley sell pattern. It did that several weeks ago. Well, not several weeks ago, a couple weeks ago on the 10th of July. July already coming to an end. So it makes that pattern here. They came out with earnings. It now is closing the gap from July 23rd July 24th. The low of that gap, if you take a look at the actual low of that session was 598.51. It has gotten up to the 596.31. 596 versus 598.51. That day that it gapped down 20 million shares. So far today, you've done 2 million shares. So it's got nice volume in it at 9:42 in the morning with 12 minutes into the trading session. So we'll have to pay attention to Apple, especially the volume overall today. Let's go take a look at Roper Industries. They are up 6% this morning. ROP is the ticker symbol. That is number 3 dollar-wise on the way up here. ROP trading out at 105, even Steven right now. Let's take a look and see what kind of volume. Looks like pretty decent volume here for the early morning get-go. What did Roper do? Let's see. Does Roper have some earnings? They profit. Where do we see here? Roper Industry raises guidance with acquisition, so they have acquired SunQuest. Expects to, in addition of SunQuest, to deliver, so their net sales, $724 million versus $699. Expect to see a lot of buyouts, folks. That's what I would say. Expect to see, that is what companies are going to do with their cash on their balance sheets as they grow businesses, especially when you start taking a look at some of these Dow stocks out here as they start dealing with the issues of a strong U.S. dollar, because they need to grow revenues. They're struggling at the top line, and the easiest way for them for that to occur is to just simply go out and make some strategic acquisitions. Let's go to Pat in Framingham, Massachusetts. Pat, thanks for calling. Thanks for holding.
Oh, you're welcome. I was listening to Bud call in last week, and when Sarpeta, SRPT, good entry point.
SRPT. So that thing gapped up huge on volume. Now this is, if we take this stock back here, this is one of these stocks, folks, where at one time was trading out at $55 in February of 2006, trading out right now at $9. So if you're looking for a good entry point on this, what I would do is, let this thing, see if this thing will come back and test the $7.03 area. That's the breakout session from July 24th, and certainly you want to see it coming back into that area with light volume. What this is really doing right now, it's just making and completing a 100% move of a move, Pat, which takes you up into that March 27, 2012 time frame. So 984 to 923. That area doesn't have a lot of volume, has a couple 100,000 shares. Today already it has done 300,000 shares. But wait for it to make that 100% move and then do a pullback. And then, you're going to have to gauge it off of what's going into that July 24th area. Your stop is certainly going to have to be a close below 703. If you get a close below that, this thing will want to go ahead and, I suppose, go all the way back to the bottom of the gap out here. But this thing does have a habit of moving in both directions relatively quickly out here. Does that help you?
Yep, a lot. And do you have time for ANX?
I do. For you, I absolutely do. So ANX is the ticker symbol. That is Adventrix Pharmaceuticals. Is this something that you're looking to get in?
Looking,
okay. So let's pull up the chart of ANX. Now, when Bud called in, Bud has been doing, I think, a lot of research on a lot of these pharmaceutical companies. So I think he was also looking at a number of different fundamental aspects as well on some of these stocks. So I'm just analyzing it from a technical trading standpoint. If we take a look at the ANXPAT, that's trading out at 67 cents out here. Had a pretty nice high volume high on July 18th and July 19th with good volume, 5 million, and then 4 million here. It's pulling back relatively nicely. The pullback on this thing, actually, one of your potential entry points was on Friday here as it pulled back into. Are you watching on TigerTV by any chance?
I'm going in there now. I have you on. I just left the room so I could hear you. But
no, that's okay, no problem. So, when you take a look at something like this, now, 60-cent stocks, here's your problem with a 60 cents. I'll tell you how to trade this, okay? If you want to take a position in this stock, here's what you would do. You would go ahead and take 1% of your free trading capital. So, if it was on $10,000, it would be $100, okay?
Yeah.
And whenever it is that you decide to enter this trade, I want you to take $100. I want you to take that 1% risk, and I want you to put the entire position at risk. That means you're not going to use the stop. You don't hear me say that very often. What you're buying here is you're buying a long-term option that will never expire unless the company goes out of business. So you're going to take your $100, divide. If you bought it today, you would divide it by 65 cents. That would tell you how many shares it is that you should buy, and just simply go ahead and stick that in a drawer.
Okay.
Okay. That's when you start taking a look at stocks like this that are trading under $1, and it can be pushed around, and liquidity on it is somewhat suspect. What you're really trying to do is you're really trying to get a nice big pop out of it. Or at least, in my opinion, the only way to really be able to trade these things is to put everything at risk out there. And the easiest way to do that is just simply, risk 1% of your trading capital. Okay?
Okay. Thank you so much.
You bet. Thanks for calling. I appreciate it.
Thank you.
Let's go to Paul in Yonkers, New York. He wants to take a look at Google. Paul, thanks for calling. Thanks for holding.
Yes. Do you see a similar pattern like on Apple? What do you see happening with Google?
Google. Are you in it? Looking to get in it? Looking to short it? What do you?
I'm looking to short it. It hasn't been up here in quite a while. It looks extended.
Absolutely. So if we take a look at Google here, let's just clear the pad here, and what we're going to see on Google is a couple of nice downdrafts. Now, the first one that we're going to look at, Paul, is we're going to go back to January 19th. I believe that was also after the release of earnings report. So let's take a look at the high to low on that chart, because you're trading, or not you, but Google is trading inside it right now. So when you take a look at that downdraft, Paul, had 10 million shares. The day prior to the downdraft had 6.2 million shares. So you're into that bar right now with 426,000 shares. What you want to do is you want to be paying attention to Google here today. See if it closes underneath the January 19th high, which was 640 and 99 cents. See if you can close below that with less than 6.2 million. It doesn't have to be like 50% less, because what it's really going against is that downdraft of 10 million shares from January 20th. If this thing closed, now that's the first downdraft. Your second downdraft that it's coming into happens to be April 13th. That's more recent. That high out there is 648.99. So if you close above the first downdraft that we looked at, what Google will probably want to do is go back and test the high of April 12th. But if you stick with us, Paul, we'll go back and we'll dissect and bisect Google for Paul in Yonkers, New York. We'll be right back, folks. You got the Dow up, down 3 points. S&P's flat. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. And then after this show, again, Money Masters with Tom, myself. Then, as we do on Mondays, we go up to it's a full day here at TFNN. We go up to Basil Chapman in Newton, Mass, from 11 to 12. Over to Larry Pesavento from 12 to 1. Daryl Martin 1 to 2. David Waite 2 to 3. Ken Shreve 3 to 4. And the Tom O'Brien Show from 4 to 6. We're on the line with Paul in Yonkers. He's taking a look at wanting to go short Google. So, Paul, Google's really kind of inside that general area right now where you could take a look at going short. When as you took a look at this chart, what is your target? Do you have a target set on this?
Well, I wanted to ask two other questions in relation to that. I've been watching it for a while, and it seems when it gets to this range, a lot of insiders seem to dump it off.
Okay.
But there's also a contrarian event happening now. It seems like they're picking up a lot of steam in terms of their Android sales versus Apple, like they're 3-1 versus Apple. How do you weigh like market events inside a stock in terms of their charts. I mean, when you have contradictory information coming out, like, Chipotle, it went down 100 points, it missed a number. And, I mean, how would you weigh certain events like huge numbers of Android sales surpassing Apple? And for some reason, for a long time, it seems like insiders have been dumping the stock very heavily when it gets to this range, like they know something. Or
Sure. It's a great question that you pose, because what you're really posing out there, you're saying, how do you take a look at a stock and go ahead and apply fundamental aspects potentially that are out there. And what I've learned over time, Paul, is that the fundamental aspects will show themselves inside the chart. They never hide. And the most fundamental thing about a chart is really what are the traders doing. And that's where you just simply start paying attention to volume and swing points and those other fundamental aspects, because, you can say, how can a stock that's doing so well all of a sudden, do poorly? And in the case of Chipotle, it actually gave you signals that it was going to it didn't matter what the earnings were. It was just simply the market reaction. The way that the stock was trading said that it wanted to go south. Didn't say it wanted to take a $100 hit, but it said that it wanted to move lower. And so in the case here of Google, you've been watching it, and this thing has really been trading in a consolidation sideways range for a long period of time. Certainly go back to October of 2011, when you're taking a look at anywhere from the lows in the 570s, into this area here where it's trading right now. So I would just use the right money management strategy, and, this is up towards the top of its range. What I did was I pulled up the position size calculator for you, just to see what the average true range on this stock is. And the average true range on a daily basis is $12.28. So wherever you go short, my opinion, your stop needs to be at least $12.28 above where you enter. Now, you can exit early if, it doesn't look like the trade is going, with you. But I don't like the idea of entering any trade where the daily volatility just simply can knock me out. Now, I suggest you use something larger than just the average daily volatility. You could use as much as a $20 stop on this. And you could actually take the trade here if you were going to say, okay, it's at the top of its trading range, and I'm going to, buy it in the $638 area where it's trading right now, and I'm going to go ahead and I'm going to get out somewhere at the lower part of its range, around the 568, 560s range. It gives you a 3.5 to 1 reward to risk ratio out there. So that's how I would take a look at it. I'm not suggesting that you go short here just yet. You want to be able to time the market as well, and I think the market may move up until Friday, okay?
How in relation? Hello?
Yeah. Paul, the show just came to an end, but give me a call back tomorrow. We can finish that up for you, okay? Take care, folks. Got the Dow trading up 23, S&P's up 2. Stay tuned for Tom and I. And if not, have a great Monday, and I'll see you tomorrow morning, folks.